Alright, I was reading a week or so ago interesting information that was attributed to Warren Buffett, kind of regarding precious metals, more particularly gold, and I'm more of a silver guy. But the one thing that I like about silver bullion is, the fact that you can touch it, and it's got different designs, and everything's a little bit different. That's kind of cool. Gold, generally, is Krugerrands and Maple Leafs and Eagles, so you don't really get these generic, silver rounds that can be fun. But the one silver that I don't like is some money that I put in a silver ETF, because essentially it just sits there and doesn't pay dividends, doesn't do anything. Luckily, I purchased it when silver was low 20, so at this point it's on paper it's appreciated, but until I sell it, it's just sort of taking up some of my nest egg money or whatever. And it's not in a tax sheltered account, so basically when I sell it, I pay instead of long-term capital gains tax, I got to pay I think they call it commodities tax or something. It's basically like 30%. So Warren Buffett's not the biggest silver or gold bug by any means, but he has a thing that he calls the piles or cubes, and it's really interesting. So he talks about if you take all of the gold that's ever been mined, or known gold, which comes out to 170,000 metric tons. Sometimes you'll see like people will reference that in a swimming pool. But what Warren does, he basically gets it in a big cube that's 68 feet, cubed. So, and that's your gold. Today's value, it's I don't know, something like $9.6 trillion, capital T. So trillion. So that's a lot of money. That's what he calls his pile A, and his alternate is pile B. And the alternate pile, it's a pretty interesting pile. It's all the cropland in the U.S. That's something like 400 million acres. And it's ExxonMobil. It's actually not one ExxonMobil. You get 16 ExxonMobils. And if you bought all the cropland and 16 ExxonMobils, you'd still have 1 trillion left over from this original 9.6. Now, of course, there's a lot of value here just in the those assets themselves, but unlike gold, these assets produce some figures on a yearly basis. And for Exxon, that's 40 billion a year or so, so you got 16 of those. The output for the all the US crop agriculture outputs 200 billion a year. So you can see where he's getting with this. Gold sits there and basically is something that kind of protects you against inflation, hyperinflation, and some other scenarios that may or may not ever occur. Or you can have these things, real assets that actually have more value. So he kind of argues which one in the long term, and he stresses very long term, which pile you really want. And I think most people would argue that pile B is going to be the smarter play. Now, of course, no one ever knows what's going to happen, and that's why the gold bugs exist. And they'll argue that there's something here to be said, which is fine, and which is why a lot of investors do get some actual metals in their portfolio, and then there are some that go all in over here. But clearly, that's sort of up to each individual. But I think it's a pretty interesting comparison, and it kind of addresses the reason why I really dislike my silver ETF, and was thinking of even selling it this year to free up that money to put it into something like real estate type ETF. Kind of addresses this, some land value, and you get dividends on a monthly basis. Because at this point, if I just let it sit in the ETF, it's going to sit there until I do something. And then, of course, it addresses the fact that these precious metal ETFs, there's that metal actually exist in any vault anywhere, and could it disappear overnight? Obviously precious metal in hand can be of use when you want to sell it. So that's Buffett's piles.